In this chapter, we're going to talk about building your trading plan. It's very important that we kind of bring together all the information that we've talked about in the crash course and today in the toolkit together in a written plan that we can follow every day. But before we get into that, I want to talk about setting up your demo account and funding that live account if that's what you choose to do. We've talked about the options for you to go live, whether it's with a prop firm or with your own money. But before that, as you're learning the ASFX systems, you need to make sure you're demo testing them. I know some people on the internet always say demo trading is foolish, it's not worth your time, it doesn't have any emotional attachment to it because it doesn't have any real money. Well, that's really, in my opinion, a load of BS. I would say a curse word, but I'm trying not to curse that much anymore, trying to be professional. The reason why that's BS is because if you decide that you're going to take that demo account seriously, then it doesn't need to have any real money emotional attachment. You should still be able to go in and trade that demo account following a specific set of rules. But if you don't, like most people don't, they just click buttons because it's a fake demo account and they don't care, they don't take it seriously. So it's be professional. That's as simple as it is. Treat the demo like it's your real account. Because remember the story I told you about me placing a 10 lot instead of a 1 lot and it ended up knocking off 25 or 50% of my account, whatever it was? Just avoid that. Avoid that mistake. Let me shortcut your learning curve and trade the system, the ASFX systems, trade them on a demo account before you go and take that funding challenge, before you go and raise money to fund your own account. Demo testing is the first step. And make sure you're doing that with a broker that's regulated. I know a lot of you guys don't listen to me. It's fine, it's your life. But you don't listen and you try to trade with these brokers that offer high leverage because you want more leverage to grow your small account. That isn't going to last long term. That's not going to build you that long-term business. Because what if you do grow that account, but because the broker is unregulated, they end up not paying you out? And that can happen. And then you don't sue them, you can't do anything because they're unregulated, like I said, based in Cyprus, based in Albania, wherever, and you can't do anything about it. So it's not even worth your time. Stay true to the long-term vision, stay true to being patient, start with a regulated broker, set up your demo account there with a broker in your country that is regulated by financial regulatory agencies where you live. That's the safest path to going down this. Whether you go prop firm or not, with your demo account, still build good habits, stick with a regulated broker. Now, I want to be clear as well. We've seen a lot of charts about TradingView. TradingView is a chart analysis platform. You can place your trades, as I've showed you already today, in TradingView, but if you're not using a broker that they offer, then you're not going to be able to do that. Instead, you're going to need to use an execution platform like MetaTrader 4. I just don't love doing my analysis on MetaTrader 4 because it's not as clean. So what I do is I have my TradingView up and my MetaTrader up. I do my analysis on TradingView and I place my trades on MetaTrader 4. I'll say that again. Do your analysis on TradingView, place your trades on MetaTrader 4. Link your brokerage account to MetaTrader 4 and place your trades there. The broker holds the money for you, MetaTrader executes the trades for you, TradingView does the chart analysis for you. Okay, now let's move into the 6 steps for success as a new trader, and then we're gonna move into my sample trading plan. So step 1 of this 6-step process to success would be, of course, education, which you're already doing right now. Today, we've covered a lot in this toolkit, and if you've seen the crash course, we've laid a really great foundation that this kind of builds upon. The only thing that we haven't covered so far today, 2 things. Number 1, the trading plan, which I'm going to show you next, and then of course, the entry signals for the A1, D1, and D2 systems. The second step towards success is to download MetaTrader 4 and set up TradingView. So you have your execution platform and you have your chart analysis platform. You can use MetaTrader 5, you can use any execution platform you'd like. That's just the ones that I found to be most reliable and most consistent for me over the last couple of years. Then once that is downloaded and set up your accounts with them and everything like that, then we open up the brokerage account with a regulated, reputable broker. From there, you set up your demo account with them to start demo trading the system, the ASFX system, to see if the A1, D1, and D2 work with your belief system, which they will. One of them will stand out to you, and then you're gonna go deeper into that entry signal to find your edge, like I said, within the overall ASFX system umbrella, whether it's the A1, the D1 like me, or if you're like Alex with the D2. Then, number 5, we're gonna decide how to fund the live account. So we're set up, we've got our chart analysis going, we know how to do our chart analysis, our execution is set up, we're trading a demo account, we're proving to ourselves that we can actually trade these systems. Then we either decide to take the prop firm challenge or go fund our account privately, whether it's your own money or family money, whatever you decide to do. Step 6 is as you trade live, you continue to do chart markups every day, and you can even take time on the weekends to do back testing to prove the system's profitable, right? I teach you how to back test the A1, the D1, and the D2, but also to build your confidence so when it does present live, you don't hesitate. You take the trades, you grade them appropriately, you put the right position size, you know where your risks should go. There's no question. It's all detailed in the plan, then you're practicing it, you're seeing it with the markups, and then you're confident when it presents in the live market. So now let's move into the trading plan. First, at the top of my trading plan, I have a section titled, Why Am I Here? This speaks to my strengths. Me and Riley have done many Strength Finders tests to get to know ourselves better, of course, but the Clifton Strength Finders test pointed out 3 things to me that I kind of took and ran with for my trading plan. I wrote that because I'm a high achiever and because I'm an encourager and because I'm an educator, those 3 characteristics in me, my strengths there, drive me and fuel my passion for trading. And that's why I'm here. I'm not going to go into detail and read the whole thing for you, but to me, when we're talking about a trading business, what's the first thing that every business has? It's a mission statement. What are they here to do? What are they here to serve? So for me, my mission statement is in my Why Am I Here paragraph of my trading plan. And like I say at the bottom right here, playing into my key strengths has allowed me to become financially independent. Doubling down on them will help me build generational wealth. So a little motivation in there doesn't hurt. Then we get into the technicals of what we're actually doing. So we talk about the time frames that we're trading, the setups that I'll trade. Here it says 3 entry signals, the A1, D1, and D2. I'm going to grade each signal that I see. The grade of the signal will depend on how many parameters are incorrect on the checklist, and I want to avoid C setups trading the A and B setups that are graded and that are presenting. And then of course in the time frames, I'm talking about the 15-minute time frame, doing the top-down analysis on the 1 hour and the 4 hour like we talked about. All of that is detailed in those 2 sections. Then we have our stop loss rules. The A1 stop loss rule, I already told you guys today. It's the entry candle open price plus your spread. And it should hold the 21 and hold the breakout level, hold the 21 EMA if we're going to see that trade continue. Now here, the stop loss rules for the D1 and the D2, they're not going to make as much sense to you because we haven't worked through that part of the education yet. We haven't gotten you into the A1, D1, and D2, but we're getting there. We've laid everything almost that we need before we start that. So this is good. But now you can see the stop loss rules are a big section of the trading plan. Now, a bigger section is the exit management rules. So I want you guys to please print this out and save it. At the top, it says what we do for A setups, then B setups, then C setups. And I've said this in many different ways today, but just read. For C setups, I close half the trade at 1R. So if I'm risking 5, stop loss is here, entry is here. Once I'm up 5, let's say this is 5, here's the entry. I'm up 5. That's where I'm taking half the trade and I lock my stop loss. So if price comes back, that doesn't turn into a losing trade. That's what I do for C setups when I trade them, which is not often. For the A setups, I only close half the trade, 50% off, at 2R. So if I'm risking 5, here's my entry, I'm risking 5, I'm not taking profit or doing anything until we get to 10. Here's entry, here's the 5, right? Just for simple math right there. That's how I'm managing the A setups. So I'm giving them more time to move and giving them more of a distance to move, because if they're higher probability, they should move further than the C setups and they shouldn't turn negative on you. And then for the B setups, I close 50% at 1.5 to 2R, whatever key level is in the way from the 6 key levels that we talked about, and then I move my stop loss to break even. So right here, this part of my trading plan really prevents me from letting winning trades turn into losers. That's the worst thing. Peter Brandt, a famous market wizard, calls those popcorn trades, where you take an entry, it moves up, let's say you're buying it, you don't take any profit, doesn't reach your take profit, comes back down and you take a loss. That's a popcorn trade. And in order to avoid those, I've implemented these mitigation rules, stop loss mitigation, risk mitigation, whatever you want to call them, these rules to move my stop loss so I just don't let winning trades go red. Simply put, that's all I'm doing. And then I have a couple of rules here at the bottom. Must follow these rules, managing the stop loss and closing at R multiples as it moves in my direction. Stop should always give it space to retest the 21 EMA. We'll go into more detail in that in the beginner course, in the A1 course. And then here at the bottom, be willing to exit and leave money on the table. Survival is key. Break up the 21 with 2 or more bars, and I should be full out of the trade. So some exit rules right there as well. That's all in this trade management section of my trading plan. Now, as we go deeper into the trading plan, we talk about the objectives. Not just why am I here, but what am I here to do? You know what I'm saying? That's where we go into these objectives. I wrote trade well with a process-focused approach, not focused on the outcomes. Remember, focused on the process. I go on to say here, the objective is to follow the ASFX process because I can't judge myself on the outcome of each trade. I don't control that. I can only judge myself on what I can control, which is my process, and how close I stay on edge to the rules that we've proved with the back testing. So again, my objective isn't to win trades. It's not. My objective is to follow winning rules that over a long period of time will present more winners than losers, because you never know which ones are going to be winners. If you show up to the market and just start thinking, I got to win my trade today, you're going to lose. You might win today, you show up with that attitude tomorrow, you'll lose. That's never a consistent approach. So it's better to be process focused rather than outcome focused. And that's what you want to talk about in the objectives. In the trading plan, I also talk about what I do pre-market and what I do post-market. Pre-market for me is 10 minutes of meditation, coffee, wake up, check Twitter, say good morning to the group chat, say good morning on Twitter, do all that stuff. That's my pre-market routine. The meditation is the biggest thing because it really does slow the mind down. I wake up with a hungry mind. I wake up at 4 or 5 o'clock in the morning. I'm very creative. I want to flow. I want to place my trades and do my thing. The meditation says, relax, bro. Let's be aware of the thoughts, be aware of the emotions, and not be greedy. I promise you, if you are over trading in your current trading, or if you're worried you might be an over trader, make sure you meditate before you trade. You'll think, Austin, that's rah-rah, that's BS, I don't want to sit there with myself. Download any meditation app, do 10 minutes before you get to the chart, and I guarantee it makes a difference in your trading. And then at the bottom here, my post-market routine, how I come back to the chart at the end of the day, mark up all the entries, the wins, the losses, the break-evens, every A1, D1, and D2 entry, every entry in my system has to get marked up because that's what I need for my back testing to make sure that those systems are still profitable today. So I come back to the desk, check in with the group at the afternoon, maybe 4 or 5 o'clock New York time, do my markups, save them in a folder, and then get off the desk for the rest of the evening to come back fresh the next day. It's not a long post-market routine. I shouldn't be at the desk for more than an hour because I got to come back the next day and be fresh. I don't want to be sitting there for 3 hours the night before. Do your 3-hour back testing on the weekends. There's no need to do that during the week. Make sense? And here, this is probably one of my most popular tweets ever. I wrote, trading is hard. Don't let anyone tell you otherwise. It can be systemized, and systems can be easy to follow, but staying emotionally, mentally, and financially stable is difficult. Managing risk and not being greedy takes focus, discipline, and commitment beyond the capacity of most. But you're here because I believe that you are one of those people that is not a part of that majority. I believe you're looking to commit. I believe you're passionate. I believe you're disciplined, and you just need direction. And that's what we're going to get into with the A1, D1, and D2 systems. Because now you've got almost everything you need. From knowing what a trading plan looks like, word for word, I just showed it to you, to knowing how to read risk reward, to knowing the basics about a line chart versus a candlestick chart, all of that is now in your mind. You might need to go rewatch some of these chapters multiple times. I would really recommend you do that. And even as you move into the next course with the A1 and D1 and D2 entries, you will literally hear from every ASFX member that's currently trading profitably. You will hear them say, I've watched the course 5 times. I've watched the videos 6 times. Every time I watch it, they say, I have a light bulb moment. So I'm not telling you to watch it to waste your time. Be willing to have no ego and to rewatch this stuff multiple times. This is a toolkit. Who has a toolkit for one use? What carpenter has a hammer on his belt for one use? Nobody. They use the toolkit all the time. So be willing to rewatch this and take in that information for refreshers all the time. Again, ego wants to think that you know more than you know. Ego says, I know more than I know. No ego says, I know what I know, but I don't know everything. To get to that place, you need to drill this information into your head. And now we're going to move into a super important chapter. We're going to profile winning traders versus losing traders so you can align yourself with the winning traders.